Yeah, I just want to let them know this is Solomon Davis from Right Side Trading. You've probably seen some of my other videos out there. Usually I'm talking about day trading, but today I'm going to talk a little bit about earnings trades. So just check us out here at Right Side Trading. We do have a thing coming up in February 5th, 6th, and 7th. You can see us and meet us there. But today it's going to be all about earnings. And when it comes to earnings, the question is, do you trade up to the earnings date? Do you trade after the earnings date? Do you trade on that earnings date itself? Um, with earnings, there's different strategies that you can actually really use. And what I'm gonna really focus on here today is trading on that earnings date. So if you were going to trade up to earnings, you would actually try to select something before, try to select options or the stock itself and call your direction if you want to short or whatever. And you trade up the earnings date, it's kind of like what is the market doing from, if you can see my arrow out here, before that market, and how does that market tends to run? Does it trade down to that earnings announcement? Some stocks tend to do that. Or do you want to trade the market up to the earnings date? Because some stocks tend to, when earnings is coming up, they tend to actually go up to that earnings date. And do you want to take a look at that? Or do you want to actually trade that earnings date itself? And then during that, you need to know, is that earnings before the market open? So you may need to trade previous day, or is that earnings announcement after the market close? And I'm also get into where you find all this information and how do you find out all these different things. Okay, this again. And trading after the earnings date, a lot of times there's some stocks that, if you just noticed, Netflix is one of these ones. Usually after the earnings date, it tends to go up. Even if it drops, it pops or whatever, Netflix seems to always go up after its, most of the time, a lot of times it seems to go up after its earnings announcement. Okay, now the thing is, how do you find your items? How do you find the things that you want to trade for earnings? Let me click over here. One of the things that I like using is Finviz, finviz.com. Finviz provides, volume, price, let you know if these things are optionable or not, and also gives you that earnings date. And here's a screenshot of up one too far, back up. Here's a screenshot of Finviz. And I don't know how clear that is. Let me bring up, let me also look at something else here. I can't do that. Finviz, like I was trying to see, I don't know how clear this slide is, but what do you use? I use Finviz to find things that are going to be happening. If I'm trading before the earnings date, it gives me this previous 5 days. If I'm trading the earnings date, it gives you that earnings date. Let me see if I can actually bring up that website. Let me try to open up a screen. I'm doing it over here. Let me do this. Finviz. So I see that's kind of cloudy. I'll bring that up, bring this over. There. This is my kind of like my default thing, what I do. Earning seasons, I tend to just bring up, I want to know what the volume is on that particular stock that I'm going to trade. Minimize that. I want to know what's the volume. Price, I usually filter by price because I usually want stocks that are over a certain price, and I want to make sure they're optionable or shortable. After the market, it's going to bring up, like this is today. This is the day. This is live right now, what's happening today. This is coming up after the market today, and EA is one of the ones that's coming up after the market today that I'm looking at for myself. So this is how you can use Finviz. And what else is here? Those are the important things that you really need to know. on Finviz. And the other thing we're going to get into a little bit more, how we what else we need to look at. But let me get back over here. Okay, so now once you found the items that you really want to trade, the question is, how are you going to trade it? And the only thing, since I'm kind of focused really on that earnings date, I'm gonna be looking at only just really one strategy and only one of many strategies around selling options. And when it comes to selling options around earnings, what you're really selling is volatility, because options tend to inflate when earnings announcements comes up, and once that volatility, after that earnings event is over, that volatility comes out of those options, and it does what we call that volatility crush. But if you're going to be trading any option after putting up the disclaimer, you need to know, you need to understand options. And if you're trading options, you should have already read this risk and this right here, this pamphlet here, to make sure you understand options before you get into trading any options and stuff. Because trading options is risky. You can and you will, as you always hear me say, lose money at trading. And let me minimize that back. Let's see. I've already shown you that. Now, earnings and selling. When it comes to selling options around earnings, there's quite a few strategies. You can sell call spreads, you can sell put spreads, you can sell a combination of call spreads and put spreads that is called an iron condor. You can sell strangles, you can sell straddles, and you can also sell puts. And you can sell puts naked. And that's probably the most riskiest of the of the strategies, and that's the one that I'm gonna focus on here for this presentation. So let's take a look at option chain here. Because now, if you're going to be selling options, you're going to be looking at different option chain. I hope this is you can see this. Okay, this is an option chain of Rite Aid. I created these slides back when Rite Aid was having their earnings back in January. And when you're selling puts, you're going to be looking at the put side. You're going to be looking at the strikes. You're going to be the thing when you are selling just before that earnings announcement. You're going to want to sell something that's going to, I like for this particular strategy that I'm using, I'm selling something that's going to expire that week. So I'll be using weeklies or I'll be using monthlies that's going to expire on that Friday, with that expiration Friday. So like I said, we're going to be focusing on put selling. Now, here's the Rite Aid chart that we're looking at right now. And since, let me move this out of my way, the earnings, I believe, was on the 3rd on this particular. The earnings was on the 3rd. So you want to look at the chart, kind of see what's that particular stock is doing at that time. So I want to look for something that's in an uptrend. You know, this is a $2 stock. A lot of times I don't trade $2 stocks around earnings because they tend to not move that much. The options tends not to be that much money in the options at all. And you really don't make that much money, but then you can always lose money. And the thing is, like I always say, when it comes to trading, you can and you will lose money. The thing is, you need to make sure that, first of all, make sure trading is something really suitable for you. If you're here, you know you're looking into this, but still make sure you're okay. You got the kind of money that you can actually really lose at this. And options are probably the most riskiest things out there to actually trade if you don't know what you're doing. And that's what we here at Right Trading is all about. It's kind of like educating you about trading. Okay, but now put selling. When it comes to put selling and what to trade, I've looked at this Rite Aid. And when it comes to selling puts around earnings, we want to sell as close to that date as we can. We're going to take a closer look right now at what to trade, and what we're going to be trading is this Rite Aid. I'm going to look at how I want to enter this, how I want to place this trade, and my exit plan on this particular trade. So we're going to look at, like I said, we're going to look at what to trade, when to trade it, and an exit plan. So when it comes to what to trade, again, I go back to that. I go to that Finviz platform, on the Finviz web page, and I'm looking for options that, or I'm looking for stocks that are going to have, you know, options with less than 7 days to expiration. Their options are going to be expiring on this Friday. Those are the ones that I want to trade. And I'm also looking for things that is going to have high volatility, because that's what we're doing. We're going to be selling volatility. And so now once I've looked at all that, I need to kind of look at my strike, and I'll look where that stock is actually trading and decide, okay, on the option chain, what strike am I actually going to sell. So now when to trade it. When it's earnings date, Finviz is going to give us, it's going to let us know, is that announcement before the market open or after the market closes. And once we get that information, we can decide, you know, when to actually sell our position. This put, that since we're just going over this put selling thing. So do we sell it the day before, or do we sell it the day of, just before the market closes? And the real trick to this whole selling of puts is to sell, you know, at days low and high volatility. And I see somebody look like somebody actually clear. Let me see what I can do. Oh, that was something else. Okay, so that's not for here. Because I did do a trade this morning. I could probably let you see that virtual trade on that one. And if you saw my video this morning, it was a couple things that I was looking at. I'm looking at for the day and looking at this morning. And we will bring those up. Oh, finally came back. Okay, like I said, Finviz. Finviz is how I go out here and find these things. I want something that has decent volume, 500,000 or really 1 million or more. Again, we go back to make sure they're optionable and all. And I want to find something usually trading after the market. When you can filter Finviz by clicking on this financials. And when you click on financials, it brings up that earnings date. And for this particular example that I'm showing you now, I'm actually going to use Rite Aid, and its earnings date was January 3rd, after the market. The other thing that I like looking at if I'm going to trade something around earnings, I want it to be liquid. I want the stock to be liquid, just in case that stock ends up, because when you're selling puts, stock can get assigned to you if you call it wrong. So I want to be able to get out of that stock, no problem. Also, I want the options to be liquid, meaning that there's a lot of volume there and a lot of open interest on the options, so I can get out of that if needed. So now let's take a closer look at the chart. On the second, we're looking at the chart, and on the second, we can see that Rite Aid was trading above $2. So I'm really, the way I do this, I'm really usually pretty aggressive. On a small stock like this, you look at the market maker move also to kind of give you an idea what you want to trade. This is a stock I've traded quite a few times in the past, and I've held. Last year, I haven't had any of it this year because, again, I didn't get assigned. When I did this trade, I didn't get assigned stock, and I haven't been trading the stock. although it may be doing pretty good, but this is just not one of the stocks that I like trading that often. Only around events, only when I see something happening. The earnings is a good event to trade this one. So looking at the stock, how it's trading, is in an upward trend. It's above $2, so I would be looking to sell a $2 strike on this particular stock on the option chain. So RAD is going to be our example. Earnings announcement is January 3rd after the market closes. Right here, January 3rd. Now on January 3rd, this is the example. Earnings call is after the market, January 3rd. This is at approximately 10 a.m. that day, and this is the trade that was done. The market had opened up around $2.12. This is a weekly option I'm looking at. The option that I'm looking at right here is the $2 strike. The $2 strike is right now, the bid ask is around 7 cents, 8 cents. Like I said, it looks like it's not a lot of money, but we'll dig a little bit deeper into that so you can really understand and know what I'm really looking at and why I end up really trading something like this. Uh-oh, that seemed like I skipped around quite a bit. Okay, now at the end of the day, you know, this is still on January 3rd, the day of the earnings. The earnings is after the market. This is approximately around 3:45 at the end of the day. I got 3:15 or 3:45. It was at the end of the day, and the bid ask was at 9 cents, 10 cents on the option. The low for the day was 5 cents. The high for the day was 14 cents. The open interest on this particular strike that we're looking at is where everybody else is trading at. So selecting this strike is the strike, you know, where everybody else is believing this is the place to play. So again, that's where I want to play, or where I would be looking to play if I was playing this one. Okay, now I got what actually kind of happened. If I can see this, it's not a very good picture on my screen and not a very good picture on here. So the day before, we saw Rite Aid was pushing up well above $2. We sold, ended up selling that at $2 strike. I think I got around 10 cents, 11 cents, 12 cents, somewhere in there. I didn't get the top, and I usually like selling it around 10 cents, 10 to 11 cents. Then the day after the market closed, Rite Aid ended up opening. It opens up here at the top of this red candle. Can't see it. It opens at the top of the red candle, closes at the bottom of the red candle. So the day after, the market closed, this is where on that day of that earnings announcement, it was still above $2. And then here on the day after the earnings announcement, the market opened down here just below $2. It rallied up and then ended up closing above $2. So you were able to place that trade. It stayed out of the money. It was out of the money. You know, you was able to close that. You should have been able to close that trade. Oh, hold on. I think my
I'm so
slide.
sorry to interrupt. We can't see the actual chart you're looking at.
Yeah, let me hold up. I see that now. I see
Okay.
that now. I see. Okay, sorry about that. Yeah, because one of my screens actually went out on me for some reason. So I'm talking about an exit plan. Exit plan. If the market moves up, um, we close the trade. At volatility cross, it should be out of the money, and we collect our money. If the market moves down, let me go. If the market moves down, we close the trade with a small profit or a small loss, or in worst case, it could be maximum loss where we may become the owner of the stock. See if my we still have a volatility crust, but our put position that we sold will be in the money. Now here's the chart. You see the chart now? Yeah, I think the chart is up there now. Okay, now here's what actually happened. Let me go over that all again. Before the day, we was above $2. The day of, the day of the earnings announcement that was going to be after the market. The market opened up somewhere well above $2, pushed down, still closed below $2. Then the day after the market, the day after the market, the day after the earnings announcement, it opened down below $2, got kind of scary, but it pushed up and ended up closing above $2. And you should have been able to get out of that trade with no problems, for a nickel or so, I think, for a nickel sometimes, or you just let it expire worthless. But now, let's go here. Now let's take a look the morning after the earnings call. Is that the screen you guys should be seeing now? I see it now. Yep. Okay. That $2 strike. As you can see, this is at the morning on that $2 strike. This is why I like trading Rite Aid around earnings, because their options goes to 0. And even though we sold some, say we sold some for 10 cents, 11 cents, whatever, you would have been able to close that trade, for 3 cents. So you only made, 7 cents, 8 cents, and maybe at the most, maybe 9 cents on this trade based on where you got in at. Then if you waited till later on in the day, this thing got down to a penny, 2 cents, So again, if you sold it for 10 cents, 11 cents, 12 cents, somewhere in there, you were able to close this thing for 2 cents. And they easily should have been able to make at least a dime on this trade. But you say a dime, what is a dime? Okay, let me take a closer look when you're selling puts and collecting premium. Rite Aid, if we did 10 contracts, at 10 cents, we collected $100 minus commission. It costs you $2,000 to actually place that trade, and to only make $100. So say you did 100 contracts with it, which I'll show you. Will I show you that? No, well, if you trade 100 contracts at 10 cents, you made $1,000 minus commission. Overnight, you had to your account, you had to be locked up $20,000. And if you did 200 contracts at 10 cents, that's $2,000 you made overnight, but it locked up $40,000 on your account. So that's why you see me a lot on a lot of my videos on my day trade. Me just collecting 10 cents. 10 cents to me is $100. 10 cents to me can be $1,000. 10 cents to me can be a couple $1,000, all based on what I'm trading. So that's why, and I'm pretty consistent about the whole 10-cent thing. So let me, before I go there, let me bring up an example of a different type of a put selling, and it was a day trade type trade. Let me bring that up if I can. Okay, but let me look at that's my QQQ that I trade all the time. Let's go to Hog. This was a trade here this morning that was in and out of already this morning. The thing is, looking at the chart, well, first of all, this is one that was before the market opened. The earnings announcement was before the market opened. This is what it usually looks like. It gives you this little thing here. It gives you the call when the call actually was before the market opened. I didn't, on this particular case, based on what I was seeing yesterday in the market, I wasn't too comfortable about actually placing a trade before, this day here before their announcement, because I'm usually and selling puts is a bullish position. So if you're not really confident about that bullish position that you want to sell, don't place it. Wait until that earnings, especially if it's before the market, and wait until that morning to do a bullish strategy or bearish strategy or whatever strategy that you want to do. In this particular case, I waited, and when I saw that it was down, it was pushing down, I ended up selling a put You know, this morning I had my plan was only to make 50% on that particular position to see how uh, just to collect some money right quick, because it happens. You still have some volatility in those options at the opening. If you can get filled, you do it. Well, I do it, and I'm out. I'm just in and out. It's an in and out type trade, just like my normal day trades, but it's on selling inflated options. Let me bring up the option chain. I'll bring it up in my virtual account here, where you can see that. Let me see if I can bring that over, where you can see hog, HOG. So you can actually see this is something that's happened today. Let me bring that up. Usually trading way out there, but for this particular didn't take. Oh, in the virtual account here, I haven't actually really been taking the position off. But you can see that it's still profit. It's still showing profit, and I really didn't close the position yet in the virtual account. But what I actually collected on this, I collected $1.16, and I was looking to close this with like 50 cents. And the price on this option did go, really all I had to click, somewhere around 50 cents, but it didn't quite get down to 50 cents. I think I closed it around, I didn't close it at 50, I closed it around 60 cents. If I get $300 or $400 right quick, that's what I do. Let me go ahead, and I didn't set up the closing on this. I will set up a closing. Virtual account, this is virtual account, so this is not, I'm not paying that close attention to it, other than just seeing if the trade was there and getting off on the trade. Let me see if I can do something else to just show you. I'm going to try to see if I can show you that market did chart. So you can see, let me bring the chart over for you. Give me just a second. Close that down. Bring it over. What I brought up was an option chart of what I actually sold. And today is Tuesday. So there you can see there was some action here of selling stuff high. There was some action here getting out at some stuff low. So that's what's possible. This is an option chain chart. You can see this. And the price action that was actually happening there this morning. Somebody was able to actually buy or sell some. Again, this red green stuff, I usually don't pay too much attention, because there's always a buyer and a seller. So somebody actually did sell something that high. I didn't sell that high. I sell right around in this area, right around opening and all. And I got out, right around here. It was right around somewhere like here around 10 something. So I just want to give you an idea of what can happen. Also on another one, let's take a look at this Netflix. I don't want to look at the FL. I can't. Netflix is another one that just had earnings just recently. Let's go to an hourly chart. And this is another one just recently, just like I had said, after earnings announcement, Netflix has been running. Even on the earnings itself, it actually gave a nice pop. So that was a good one to actually do this put selling strategy on. If you had sold the put, I still may have that position. I've cleared it out from here, and I can't really show that. But again, on the Netflix, selling a put on this particular one, it would have also been a good trade. The other thing that you can look at when it comes to put selling or doing a put selling type strategy on different stocks, check the seasonality of that stock also to verify, okay, is it usually bullish? Because again, selling puts is a bullish strategy. So you want to verify, is it a good strategy? Is a put selling strategy a good strategy for that particular stock during this particular season? For Netflix, it definitely was. For Hog, Harley Davidson, it definitely maybe it wasn't. It wasn't an uptrend, but this morning when I saw it down, all I really wanted to do was just do a quick volatility sell. Okay, let me bring back up my little presentation. Also, if also the other thing when it comes to earnings, I usually have a watch list. It's from the night before of what I'm actually going to trade and what I'm looking at. So I have those in my watch list. It's only 2 items that I'm really interested in trading. That's Hawk, Electronic Arts. These are not trade recommendations. This one here actually is still kind of moving up. It has earnings. This is the day after the market close. This other one here, there's another one. They all dropped a little bit with the market, but they're still dancing around here. This is one that's below. Cloud is another indicator. I should just take it off. I'm not talking about indicators. This is another one here that may, let me just take a look at it you look at it on the bigger picture. This thing has been rocketing up. It did a pullback. It did a crazy pullback with the market, with everything that's going on in the market. So again, selling a put on something like this, you might want to be way down here at 200 and all. This is not a trade recommendation. This is just how I look at selling puts on these things and looking at some live charts. And let's open this up to all. Because again, if we're selling down at 200, you will only not that much money, so maybe not that far down and all, unless you want to play the 10-cent thing and sell down here at 10 cents and try to sell a few hundred contracts and see if you can get filled. But looking at the chart, that's where I would want to be. Or, yeah, I would want to be down here around 200 somewhere. 200, maybe 220. Let's see what 220 looks like. Not a trade recommendation. Just looking. Again, you can almost maybe get $1 here, 80 cents. And even selling 10 at 80 cents, that's $800. And again, we got to look at the money. Another thing here, let me just bring that on up. So let's look at one contract. Let's do it that way. Looking at one contract, the market's only giving you 65 cents. So you're only really going to get $65. You're only going to collect $65 with $21,000. So do you really want to do that trade? Up to the green freeze. Oh. Yeah, see, I lost connection. I think my screen had frozen there for a second. Yes, my internet connection, it gets bad. Let me I'm trying to bring back the presentation back up. Let me see. All right, earnings trading. What I have to offer here, if earnings trading is something that you really would like to learn more about from us here at Right Side Trading, what I have to offer is I like kind of like hands-on, one-on-one type. We also, if you're in the Tampa Bay area, we have a little training room, or we can do this over the web teleconference or webinar, something like this. What you really need to know when it comes to earnings trades, you really still need to know how to look at the charts. You need to understand candlesticks, understand what is that chart telling you already about that, earnings event before it even happens. A lot of times the charts will give you telltale signs that thing is getting ready to go down. Candlestick patterns, you need to actually understand that also. The other thing that I look at when it comes to earnings, you need to look at support and resistance, or supply and demand. You need to understand, okay, if I'm going to sell above it, how far above it should I be? If I'm going to sell below it, how far below it should I be? And all. Then you need to know a little bit about, the options. How do I go about selecting my strike? How do I go about selecting which model, or do I trade weeklies? And then there's strategies. I only talked about one strategy, and that was a put selling strategy. So for all this, I know it'll take anywhere from 1 to 2 hours on each one of these. I'm usually pretty flexible about that. And for this whole coaching and all, I'm looking at this is the cost that I would actually will like to do this for. Normally, me offering something like this is usually it's $500 for each for intro to candles. You know, candle pattern select, those two are usually combined. You need to look at first the money. Is there any money in that trade? Like that one trade that we looked at, I don't know if you actually saw, I don't know where it cut off at, but I'm trying to show you some examples. There was one example there where you was only going to make $65 on the trade, and it took $20,000 to make that 60,000. But the probability of you being right was like 90, I think it was 94%, and it was like, because it was a way out of the money put that we was actually selling. So those are some of the things that you really need when it comes to put selling and, you know, trading, period. You know, so is there any questions at this time? I think this was the example that I was showing. I don't know if you actually saw that. This was the one where we were selling something. And yep, send confirm. Oh, and I was doing one contract. I don't know if you saw this part. And yes, it said $70. See, but you're making $70. If you're in a cash account, it takes $21,000 for you to make that $70. Or in a margin account, it takes $2,000 to make that $70. You know, is it really worth putting up that kind of money to make $70? For some people, it is. I know there are traders out there that I know that does these trades every week. You know, like clockwork. But for some of us, we don't want to put up that kind of money, you know, in order to make that type of trade. Okay, also any questions? All right, well, that's all I really wanted to present. We do have this thing coming up in February. See if meet out there. If you're something you're really interested in doing, again, contact me and I'll see if you just only can make one day. Contact me and I'll see. I will see about we'll get you into the event. And since you're here on this today, and just let me know. Again, my email address is solomon@rightside trading.com. And that's all I really had today.